This is Murray Bullier from Boosted Profits, and I just wanted to show you this quick video that demonstrates how we can create a win-win scenario for commercial real estate realtors and their clients. So let's jump right in. So the first thing I want to do is give you some background on what we do at Boosted Profits. Uh, there's over $100 billion in tax incentives available to U.S. companies designed to stimulate the economy, yet sadly, over 90% of them are not getting the benefits that they deserve. Most companies are missing out. Anyone who owns commercial real estate is eligible for these tax incentives. It's not applicable for residential. So what my company does is we identify potential tax savings for business owners in less than 15 minutes using a proprietary app that we have. And once we identify those tax savings, we only get paid if we actually deliver savings to the client, and we only get charged a small percentage of the savings derived, which theoretically would not have been achieved without our help. So the beauty here is we do all the work and take all the risk. So let's give you some examples just to give you an idea of the kind of money we're talking about. Let's assume a building valued on the balance sheet at $2 million, which includes renovations. And let's assume that they have an annual property tax bill of about 60 grand. This is a regular, business. It's not anything large. It's just kind of a modest business. So my question to you is, which of your past, present, or future clients would not be interested in immediate cash back or savings on property taxes? Here is what the results of our app could look like. There's some variables, but just to give you an idea of the kind of money we're talking about, uh, we would expect, depending on the use of the building, that we could save around $10,000 a year on property tax, and we could get a one-time cash flow tax savings by accelerating depreciation of 148 grand. That's a total of 158 grand for the first year alone. So that's not chump change. This is big money. Here's a sample, another screenshot from our app, which goes into some more detail on what cost segregation is and how it works, and some examples of what we've done. 148,000 one-time saving, and here's a screenshot from our app covering property tax, 10 grand. So armed with this information, how does this help CRE Realtors, you may ask? Well, this is a huge potential value added service to your clients. If you think about it, this is a significant differentiator for you from other realtors. It opens more doors. So think about your past clients. Your past clients all have the potential to buy or sell again, so you can stay relevant to past clients, get more business. I recommend that you call all past clients up and say, hey, we have a way that you could save some money on property tax and get a one-time large cash flow. Would you be interested? I think you'd get a lot of yeses on that. Current clients, anyone who's in the process of buying property, you would significantly accelerate the purchase decision. Immediate cash back to those clients makes property much more desirable. And then even future clients, based on the studies we have, there's over 18 million businesses are projected to be sold, handed down, or closed in the next 8 to 10 years, based on demographics and how and this current state of the economy. So when you have 18 million businesses, how many properties is that? That is going to be a major event over the next 8 to 10 years that you need to get in front of. Establish yourself with the owners before that happens. So you may be asking, and I get this question a lot, why doesn't every business owner use cost segregation to reduce taxes? Why is this such a big deal? Why isn't this everyday practice? Well, a lot of small, medium-sized businesses are unaware of the program. They don't know that this stuff exists. Some are unaware that they qualify. Others don't have the bandwidth to implement. Typically, if they're outsourcing the accounting or have a small accounting office within the company, they don't have the bandwidth to implement this. It's like, my analogy is like a doctor. Your regular doctor gives you a physical every year and takes care of your sore throat. But if you have a heart attack, or if you break an arm or something, you might go to a specialist. All right. The other thing is the cost segregation study requires an engineering study of the building, where the building has to be broken down into components, which is usually outside the wheelhouse of an accountant. So this is why every business owner doesn't already use these things. They're not aware of them. And so it's my job to make sure they're aware and try to, when they're unaware they qualify, the best bet is to get them in front of our app and, let's not guess. Let's just run through the app. In 15 minutes, we can figure out whether they qualify or not. And, it could be some huge savings. So we can help. We've been doing tax and cost remediation strategies for over 17 years. The two examples that I gave, property tax and cost segregation, are just two of the several uh, weapons in our toolbox where we can save companies money. The reason I show those to commercial real estate realtors, and the reason it makes so much sense, is because all your clients qualify for those two strategies. All your clients for both of them. So it makes sense to work with you and share that information with you so that your clients can benefit. And as I mentioned, we can estimate when there's any doubt. We can estimate the potential savings in less than 13 minutes with a few questions using our app. So when in doubt, let's just go. Let's just take a quick look. There's absolutely zero risk to the business owner. We only get paid on a contingency basis, only a small amount of the actual savings generated. And this is important that we do work hand in hand. We want the tax professionals from those companies to be present. We want to make sure that they completely understand what we're doing throughout the entire process. Full disclosure, there's no hidden agendas or voodoo accounting here. This is all straight IRS approved strategies, IRS condoned and encouraged strategies. And we want to make sure the tax professionals of your clients are also on board with this, so there's no surprises, and we find that they're very supportive. But wait, there's more. So if that wasn't good enough to demonstrate why we need to get in front of your clients, past, present, and future, we have even more reason to do so. There's a one-time tax loophole created by the 2017 tax law changes. It's a nuance that not many people know about, and so if you're watching this in the year 2018, you need to pay special attention. So as you know, one of the biggest features of the tax law change was the corporate tax rate dropped from 35 to 21%, so that's great news for business, all right? But that also means that your deductions that you take when you file taxes every year to reduce the taxable income have lower bang for your buck. Okay, you have less deductions. For the same deductions from one year to the next, it's going to drop a lot. So you're not going to get as much value out of it. So we have a last time opportunity in the tax year 2017 to leverage the higher deductions before they disappear for good. I want you to let that sink in. A one-time opportunity to leverage those higher deductions. You want to this reduces your income at a much higher rate. So implementing cost segregation using the 2017 tax rate represents a 40% higher cash flow savings than using the 2018 percent rate. Okay, and businesses right now, as I record this, which is early March 2018, they are currently preparing taxes based on 2017 activity. So in order to capitalize on this loophole in the tax rate changes, cost segregation, which is the accelerated depreciation, the one-time tax remediation strategy, must be implemented into the 2017 tax computation to take advantage of the higher deductions allowable. I hope that makes sense. You're taking advantage of the bigger bang from 2017. If you wait until 2018 to do this, this is still you still will be able to do a cost segregation study out into the future. The problem is you will lose 40% of that savings by waiting. So in our example that we gave earlier with the sample property, we had $148,000 of savings with this cost segregation plan if we use 2017 rates. If we wait just until next year, that drops to 89,000 in savings if we wait. So that's a 40% reduction just by timing. So my conclusion is U.S. businesses should not file 2017 taxes without at least considering it. I mean, there may be other considerations that you might not want to do it, but you should at least consider it because that's a big chunk of change just for timing. You probably have existing clients right now, past clients, or friends who are unaware of this one-time tax loophole. Imagine the enormous goodwill to share this information. And on the flip side, imagine the uh, frustration people would have if they missed out on something that they, just a little knowledge they could have implemented and saved them quite a bit of money. So my suggestion is to get the word out to everyone, make sure that business owners and their tax professionals understand this crucial timing here. It's a nuance that not everyone is aware of in this tax law changes, because the tax law changes, frankly, there's a lot of complicated uh, issues there. And, as my company has taken a look at this, we kind of realized this after the new year that, hey, we need to make hay with 2017. So I hope that makes sense, because once the books on 2017 are closed, the loophole goes away forever. So I hope that makes sense. I hope you can understand how saving your clients money on taxes will be a win for you, and obviously a huge win for your clients. And so I'd like to work together with you. Let's talk about this some more in more detail, or if you have any questions, I'd love to work with you. Here's my email, Murray at Boosted Profits, or you can jump right into scheduling a call with me using this link and booking a time so we can block out some time on a calendar. It's been my pleasure. Thank you for watching this, and I look forward to working with you and saving your clients a heck of a lot of money and making you more money at the same time. Thank you very much.